Today I have a really strange but eye-opening question for you. Come a little closer. No, I'm just playing. You're coming close to a computer screen. That's very strange. Don't do that. So I actually do have a question for you that's going to be extremely eye-opening and extremely relevant to you right now. Do you want to blow your trading account? Do you want to run out of money completely in that account? The answer to that obviously is no, but it's a cold, harsh reality to what normally happens to traders. In this video, I want to show you how to minimize your chances of blowing an entire trading account and also show you how you can still make profits even if you're wrong about a particular trade. So let's go ahead and dive into that right after the intro and disclaimer. Go ahead and hit that subscribe button below the video if you're not subscribed yet for more valuable content like this. Each and every week we post a video. Also, follow us on the socials. Links for Instagram and Facebook are below or at the trading channel for both of those. And I'll see you directly after this to show you how to make profits even if you're wrong about a trade. Talk to you soon. Making profits, even when you're wrong, is an extremely unique idea, and I understand that. Let me tell you a little bit more about what I mean. I'm sure you've placed a trade before, and say it's right here is where you place the trade, and you go, I know this market's heading higher and going to hit at least this high again. And then the market goes up a little bit, comes down, and then stops you out because you had a stop loss right below this level, right? That's probably happened to you. But what I want to show you today, and by the end of this video, what you're going to know and understand is how to only be stopped out when you are completely wrong. Small stop losses are not the way to do it. What I'm going to show you in this video is something called scaling into a trade. I'm going to show you how to scale in, but not in the way you've heard of before. In a different way that's going to allow you to make even more money if you were wrong on an initial trading opportunity. And let's dive into that right now. In this video, I'm going to show you that, and I'm also going to teach you how to minimize your chances of actually losing money, losing all of your money on a particular trade or blowing your entire account. I'm going to teach you that as well, so by the end of the video, you'll have a formula for both of these things that will help you achieve your goal of becoming a consistent and profitable trader. Let's jump into the actual strategy itself, the system that I'm going to teach you today. The system I'm going to teach you is determined by higher time frame type of analysis and then going down to lower time frames for trades. So if you're comfortable with that, pay attention. We're looking for trend on higher time frames, and there's a trend continuation way of doing this and a counter trend. We're going to talk about trend continuation first. The way that I identify trend, you've probably heard this before. If you've been a part of the channel for a while, the way that I identify trend is a 1, 2, 3 move. I need a close below the previous level, and this did close below. My line was extremely janky, a little bit crooked, but let's take a look here. We do have a couple of close belows right here from this level. So what I'm telling you is that this right here is initially what I'm looking for. I want at least a 1, 2, 3 move. 1, 2, 3, consisting of a high, a lower high, a low, and a lower low. As long as I get that, that to me is the initial start of a trend. After the initial start of the trend, this is where the system's coming in. What I'm going to do is go ahead and point out my maximum stop loss and my maximum target. I'm ready to do that as soon as the market breaks through these lows. As soon as this happens, I'm ready to point out my maximum stop and my maximum target. And you're going to understand why I'm saying maximum here in just a second. So what I would do in this specific case, and let's go ahead and go through the bias. The bias we have, considering that the market just did this 1, 2, 3 move, that gives me the bias that we're going to be in a reversal. The way I know I'm no longer in a reversal is if we break through these highs. If I break above this high right here, then I no longer consider this a possible reversal. And really it would be these highs since they're so close together. So what I'm going to do with a maximum stop loss is make sure that my maximum stop loss is above a level that makes me wrong. Really weird concept, right? Unique concept. What if I only got out of a trade if I'm sure I'm wrong? I know what you're thinking, that Steven's being a bit of a smartass, and I'm not trying to. I'm more so being a smartass to myself because this is a concept that I have been guilty of not using in my past as well. So right here, would be an initial spot that I'm definitely wrong. If the market breaks above this high, then we're in trend continuation to the upside. We're no longer in a downtrend. We're no longer reversing. So my max stop loss would be above those highs. Now, secondly, the next thing I'm going to do is put a maximum target. If I'm expecting trend continuation and this market to head lower, then if it's going to head lower, what does it have to do? It must break through the lowest lows in order to head lower. So my maximum target would be right there with my maximum stop loss where my red line is. At this point, we have a maximum level of losses. This is where we know for a fact I am wrong and I want to be out of this market because I made not a bad trading decision, but my bias on this particular market was wrong, which is totally fine. None of us are psychic. We can't guess exactly what the market's going to do. But once we have these two levels met, we also know if the market's going to continue in this reversal that I just decided was my bias, then it must, in order to continue this reversal, go past our lowest low. With that being the case, that's going to be my maximum target. And I like putting it on the bodies of those candles just in case we don't quite go into trend continuation and trend following, but instead come down to retest the lows. With that being the case, I will pull a Fibonacci retracement and I will put a box if I'm planning on shorting the market from the 50% retracement up to my maximum stop loss. Why do you think I'm doing this? Why would a Fibonacci retracement even play a role in this type of strategy? Doing this ensures an area, right now, our gray box that I'm going to draw in just to make sure you're seeing this. This gray box right here is the area that I have to place trades in. Now, pay attention to this part. This is a very important part of this concept. In this area is where I'm going to be placing trades. You heard that correctly. Multiple trades. This is the part of scaling in that I wanted to teach you. And what I have at this point with this trade setup is a maximum stop loss. And this is where we're going to work on risk management and minimizing the opportunity for you to blow an entire account. Your risk management plan is totally up to you. I'm going to be talking about hypothetical risks in this situation, so don't take any of it as financial advice. But what you may be able to say and what you may do, and something that's similar to what I would do, is say at this point, my maximum stop loss is going to be 1% of my total account value. So I have a 1% stop loss in total, but I want to have 4 opportunities to enter in my zone. I'm expecting a reversal. I found a zone that I'm comfortable trading in anticipation of that reversal. And I want to have 4 opportunities to place trades in case the market goes a little higher than I expected or starts to continue before I expected it was going to, whatever the situation is. So if you want to give yourself 4 opportunities to open a position in this zone, then you have to risk 0.25% of your account per position if this is something you would want to do. Personally, this may be a way that I would trade. I used to trade this system back when I first started in my first year of trading, and I didn't really know exactly what I was doing in terms of trading, but it was still profitable for me. So that's just a testament to how well this can work for you. But one of the main things I wanted to say to you that are EAP members in this video is that I am planning on coming out with a full strategy like this. I'm going to start incorporating this again into my trading plan. I do have to do some testing and figure out exactly how I want to enter the market in these areas, things like that, but that's going to be coming soon, the full trading plan around this type of system. So if you're in the EAP, keep a lookout for that. If you want to be in the email analysis program where I share complete trading systems along with a full trading plan attached to it and teach a lot about risk management and discipline, the most important parts of trading, then that link is in the description as well. I also will be sending you 3 to 5 of my favorite trades for the week, each and every week, to your email inbox. Again, EAP link is in the description, but let's get back to this risking 0.25% of your account per trade. If you're doing this correctly, it's going to make it very difficult to blow an account, right? If you're waiting for the market to get in this area before you even place a trade, and then you're saying, I'm only risking a maximum of 1% if I get completely stopped out, but I want to open up and give myself an opportunity to open up a few different positions so that just in case I'm wrong about my initial trade that's right here, I still have an opportunity to get in here, and possibly even here before we get stopped out. and take advantage of a larger profit target on those positions. So let's move the market forward. And remember what I said, what we're going to do is go down to a smaller time frame in order to actually achieve this. So let's go ahead and go down to a smaller time frame. Let's go ahead and go to the 1 hour chart. From a daily to a 1 hour would be a good idea. You can actually scalp and day trade with this as well. I did that. I tried to do a live trade doing this a couple of days ago, and the trade never gave me an opportunity to actually get back in the market twice. So I didn't get to necessarily scale in, but I did win the trade. I'll probably throw that up in the video somewhere. But here's our opportunity. We have the market coming up to our area on the 1 hour chart. And when you ask, how do I enter the trade, Stephen? However you would like. You can enter with a hammer candle, or in this case, a shooting star candle, a double top, some type of just 2 in a row red candles. However you would like to scale into this position is totally fine. What you're doing is creating an area that you're going to accumulate a position with a set profit target and a set maximum risk. This is where I know I'm wrong, so that's where I want my risk to be. So let's just see what would have worked out in this specific case. Let's say you're trading based on shooting star candles and double tops in this specific scenario. Right here, if you look on the far right edge of my screen, this candle right here, it would be considered a shooting star candle based on my rules. So what you would do is open up a short position, because we are in the gray box. We're in the area of interest. We're in the area where I want to start accumulating short trades based on the bias that we're looking for a reversal out on a higher time frame. So I would go ahead and place a position there with my stop loss at a maximum stop loss up here and my max risk right down here. So there we have our first trade. And remember, I want to risk a total. I have 4 positions in this box that I want to try to get. As I'm getting these 4 positions, I want to risk a total of 1% of my total account if I'm completely wrong. That means every one of these positions is worth 0.25% of my account balance. So with that being the case, let's go ahead and move forward. See what else we get here. Okay, we're pushing down, pushing down. We push back up. Do we get any other shooting stars in this area? We do get a pullback with a shooting star candle right here. So what if you said, okay, I want to go ahead and open another position here at this shooting star candle as well. So now you'd be looking at a very similar trade setup, another 0.25% of your position set up right there based on that shooting star candle. And then the market continues and we push down, then we push back up and we create this double top scenario. We have a market that pushed up to one top, pushed down and pushed back up to another top. We also get a shooting star candle at that top. So you may say, yet again, I want to go ahead and enter the market on that shooting star candle and this be my stop. Again, max stop is right there, max target right down here. So now we've accumulated a decent sized position at this point. We have a total risk of 1% if we get completely stopped out. And even right now, we only have 3 positions. So if we get completely stopped out right now, we only lose 0.75%. And waiting on an entry reason is extremely important. Coming up with your entry reason, extremely important. Hopefully you can see already how testing this can be extremely, and using it once you've tested it and created a trading plan around it, can be extremely beneficial to your trading. One, using this small of a risk, and even smaller if that's something you're not comfortable with. Using a very, very small percentage risk of your account will keep you from blowing your account. It for the most part, minimize your chances of blowing your account. And it gives you an opportunity to get some really good risk rewards out of these. And even if you're wrong initially about a trade, you can go ahead and make more as the market rises. So the whole point of that is if you're wrong right here, the market comes up and then creates a double top right here. And you say, okay, I want to enter the position there. You actually make more on the second position because you have a better risk to reward ratio. Hey, sorry for cutting in here on the video, but I just wanted to let you know that if you're having any trouble with trend or reversals at all, we have an absolutely free 3-part course that we're going to make available for you over the next few days. All you have to do is go in the link in the description. It will be right here. Click that link. You'll come to a page like this. Watch this video if you'd like to. Otherwise, click yes and then click yes, and you'll be taken to a 3-part training series all about trend, consolidation, and reversals. That link is in the description directly below the video. Click that if you're interested. It's absolutely free, no strings attached, and I will see you back on the video right now. Moving forward, we've already accumulated 3/4 of our position. So as we've accumulated 3/4, we only have one position left remaining that we can open up in this zone. So we'll be looking for another opportunity in the zone. We break through, we come up. Do we get a shooting star candle on this retracement? And no, we want a shooting star candle that's also the swing high, and we did not get that here. So we've only accumulated 3 positions, and now the market is pushing down and clips our target on this candle. So what we did was we risked 0.75. Remember, we only got into 3 of these opportunities, risking 0.25% each opportunity. We risked 0.75%, and each trade was over a 2-to-1 risk reward. So let's go ahead and do the math on that. If I bring over the calculator, what we have is 0.25 times 2.32, 0.25 times 2.32, which gives us 0.58. We have 0.25 times 2.13, and we have 0.25 times 2.59. That gives me 0.64 plus 0.54, or 3, messing up with numbers here, plus 0.58. Now, all that together gives me 1.76 right at it. So what we did was risked 0.75% of our account to make 1.76% on our account. Really, really good risk reward in this specific scenario, over a 2-to-1. So we have over a 2-to-1 risk reward, and we were only risking a total of 0.75 with a 0.25% risk on each of these positions. So this is how you would do it in trend continuation. That entire process is a bit advanced and will take a little bit of time to get used to, but it can incorporate, one, an incredible risk management plan that can minimize your opportunity of ever blowing an account, and 2, it can give you ridiculous risk reward ratios on your trades. And of course, everything in terms of risk management is always going to be your decision. You have to understand that Forex comes with a very large amount of risk. And if that's not a risk you're comfortable with, you shouldn't trade in the markets. But you can minimize that risk by using extremely small position sizes. So that's one of the examples. Let's go ahead and do one more example of trend continuation. This video is going to be extremely long, I can already tell. We'll do one more example of trend continuation, then I'll show you guys a counter trend example. Where in the world were we? Okay, we're right there. Let's just continue with this trend. So as we push down here on the euro yen, we're pushing down, boom, and we actually break through a low right here, finally. After we break through that low, we don't get enough of a pullback because my max stop loss, if I'm looking at this trend continuation, my max stop loss would have to be above this high because that's the point that's telling me we're going back up. So remember that mindset. You're looking for your maximum stop loss. So then we continue lower. We break through this support level. So once we break through that support level, we do get a pretty good pullback. So what I know after breaking through this support level is that I'm going to have a maximum stop loss above this level of resistance. Because if the market, let me explain this bias to you so that you'll completely understand what I'm saying. If the market breaks and closes above this resistance, then I am going to consider this a reversal and expect the market to continue higher. As long as the market does not break and close above the level I just circled, then I consider this to be in trend continuation still. So with that being the case, my max stop loss would be somewhere above that high. And if I'm expecting trend continuation, my maximum reward or target would be down here at the bodies of these candles. Remember, I like doing it on the bodies. With that being the case, my next step, pull a Fibonacci retracement from my target to the stop loss, the maximum I'm willing to lose in terms of the area where I know I'm wrong, not in terms of money. The area I know I'm wrong is if we get a break and close above that high. Then I will take my gray box, throw it up just like that, from a 50% retracement up to the max stop loss. The reason I'm doing that is because this area is going to be my area of accumulation for trades, and I want at least a 1-to-1 risk reward on any of the trades I take. So this gives me that opportunity, and now the market is pushing higher, and now we're actually getting into my zones. Let's drop back down to the 1-hour chart, go over to our zone now. Here is our zone, and we have the market pushing higher. Remember, we're looking for shooting star candles in this specific example. Your entry reason is totally up to you. You can do whatever you would like. Remember, you must test all of these strategies as well before actually incorporating them into a trading plan. And you know what I would like to do is also double tops. So we're going to do double tops and shooting stars. And I think I said that in the last presentation as well, or in the last example. We are now looking at a double top in our zone of accumulation. So what would I do? I would go ahead and open a position on that double top, just like this. I would have a stop loss at my max stop loss. I would have a target down here. And what normally happens with traders is they go, oh my gosh, double top in my area of accumulation where I want to see this market go short. And they look at that and they go, okay, well, I'm wrong if the market makes it above that double top. So their stop loss, the reason I say make more when you're wrong is because their stop loss might be somewhere like that, just above this double top. And let's see what happens there. There you end up getting stopped out. So even if you're wrong, in our case, we were wrong about this double top because the market didn't make this double top and then just fall like a rock coming out of the sky. Of course not. Gravity's a bitch, but that's not what happened. Instead, the market hit that double top, came down, and then pushed higher. As we pushed higher, we ended up getting another entry right here with this green shooting star candle with a long wick to the high side. So in that case, we would open up another position. We would say, okay, now we have another position here on this green candle. Same thing. My maximum stop loss is here. And now I'm actually making more money than I would have if I would have placed a whole trade right here. I would have just lost the whole trade. Most traders, if they're risking a total of 1%, would have a 1% stop right here. And it would have been based on this double top. And they would have just lost that entire percent of their account. Instead, we're accumulating in a zone and we're only getting out of the trade when we know we're wrong. We're completely wrong if the market does blank. And for me, that means if the market breaks and closes above another level of structure. So that's what this red line represents, as we talked about on a higher time frame. Now let's continue and see if we get to accumulate any more position in our zone of accumulation. Right here, we end up with nothing, no shooting stars, no double tops. And as we continue down, we get a shooting star swing high candle right here. This is in fact the swing high, and it is a shooting star candle. That's something I do pay attention to with shooting stars, is I want it to be a swing high. So with that being the case, another position can be accumulated. Right here, I can go ahead and say, yep, I want to have a position open from this area because I got a shooting star in my zone, if that's the rules you're going to use. Boom. Cool. Now we'll continue. And we're out of our zone now, so we're not even looking for trades. We're just waiting on these to play out. We push down, we push down. We may have went ahead, and if you're looking at the computer and something gets this close to your target, you can take your targets off. You're at 1 pip away. I say that. That's your decision completely. I personally would take targets off in that situation. But let's just see what happens. The market pushes back up. This is not our stop loss. Our stop loss is way higher than that. Do we get a double top? No, no, no. Do we get a shooting star? Not here, no, no. Do we get any type of shooting star? Nope. And the market pushes lower. And finally, we are actually hit for our targets in that particular situation. So that's a second example of how to use this for trend continuation. Okay, so with this video being as long as a Netflix show, we're already working on like 24 minutes. I'm going to go ahead and end the video here. If you would like to see the counter trend version of this particular strategy where you're picking out tops and bottoms, then make sure you leave a comment below and let me know if that's something you would like to see. If I get enough comments, I 100% will do a video on this same exact style of trading, scaling into a position, but picking tops and bottoms in a counter trend manner. And before I go, let me show you a live example of this on the euro dollar that ended up winning, but I wasn't able to even scale into the position. But just to give you a better look at another example of using this in order to profit in the Forex market while risking a very, very small amount and capable of making more even if you're wrong on your initial trade. Check that out and I'll be right back. Hey guys, about to jump into this euro dollar position, show you a little bit about scaling in here. Let me go ahead and get my maximum stop loss set. There we go. Where do I think the market can possibly go? Right there. And I'm going to show you how to scale into a position today. I'm going to try to do this. I normally do it looking at a daily chart for my bias and then doing the actual trading itself on a 4-hour and a 1-hour chart. But for time's sake, instead of having to wait on a perfect situation to happen, I've already found a pretty good situation on lower time frames here on the euro dollar, and that's what we're going to look at. That's the trade we're going to place right now. So what we're going to discuss in just a second is scaling in and how to do so with the correct risk management always wanting to have a maximum exposure. And for me, my maximum exposure into this market is going to be 2%. But right now I'm only going to risk a solid 0.5% of my total account. Let me go ahead and put in the stop loss of, let's just do 19 pips or 20 pips. And a take profit, let's do 27 pips. And right now, let's do a 0.5% risk. Okay, so now we have 0.5% risk. We have our full trade set up. I'm gonna go ahead and click the button to place the order. Okay, first position is in. What I'm gonna do now is exactly as we've discussed. I'm going to go ahead and actually start scaling into this position. If we head higher, as we go higher, I will scale in with new positions as we have entry reasons, let's say double tops or whatever entry reason I decide to use. I'll scale in with new positions as we head higher. This way I have a chance to actually get a better risk reward if we do head higher. And if we go lower, I can move my stop loss down as we go lower and open up different positions with a smaller stop loss, which will also add to the risk reward of this trade. And at that point, I will also have this stop loss and this stop loss completely gone and have no risk on the trade. This is one of the benefits of actually scaling in to a trade, and that's what we're gonna do right now. So I'll keep you guys posted on how this trade plays out. If we end up going lower or higher, we're gonna add some positions to this throughout the day. So again, I'll keep you posted. See you in a second. Okay, so we've actually seen a pretty good bit of movement here out of the euro dollar trade. We are on the 5-minute chart, so obviously it moves pretty quickly. We did push up, had absolutely no reason to enter the trade on another position, and I do actually look for another reason to enter the trade. Just because the market moves higher doesn't mean I'm just gonna place an automatic entry, but what I am gonna do now is if we can get a pullback up into our trend line, you can see right here, almost this little flag pattern from a very impulsive move on a higher time frame, which we're not gonna look at right now. If we get a pullback up into this trend line, I'm going to place a trade there and add to this position also. Now that we have created a new lower low than our previous low right here, and actually have we? Let's make sure before we actually go into changing the position and moving the stop loss. Horizontal line there. We actually have not. Okay, so we need this market to break lower before we can move the stop loss. But if we get a pullback up into this area, I'm going to add a second position to this with the same about 0.5% risk. So let's see if that happens anytime soon. All right, so we got our close below, meaning we can actually move our stop loss down now to just above this high right here. This is the new high that we are expecting the market not to break if we're going to continue lower. So that's what we're going to do. Here we are back on the euro dollar day trade, and the last time we saw this, I think the market was about right here on the right edge of your screen, and we never really got an opportunity to scale into this trade. The concept still applies, and we're still going to go about and look at the analysis behind it. But as you can see, the market pushed up, pushed down, and eventually came down far enough to hit our orange line or our targets. And if it wouldn't have been filled there, it definitely would have been filled through here. So it was a winning trade. We just didn't have an opportunity to scale in. But that, irregardless of that, let's take a look at the analysis behind this trade to give you an idea of what I was looking at. So I'm going to go to a 1-hour chart because my 5-minute chart is where I was placing the trade. The 1-hour chart is what I wanted to move out to. Just like on the daily chart, we went from daily to 1 hour. On 1 hour, we're going to go 1 hour to 15-minute or 5-minute if you're using this as like a day trading type strategy. So here on the 1 hour, what I noticed is that we have a double top followed by, does this look familiar? 1, 2, and a lower low, lower close of that, which is my 1, 2, 3 move, exactly what we looked for at the beginning of the video. Same exact deal. We have our 1, 2, 3 move, and since we have that 1, 2, 3 move, I know that I'm expecting a reversal, as in I'm expecting this market to continue in the downward direction. My maximum stop loss, and where I think I'm wrong, is when the market breaks and closes above these highs. If that happens, then I'll be expecting this market to actually continue higher. So my maximum stop loss is going to be above those highs. My maximum reward, in this case, the example we looked at earlier in the video would have been there, but since I was thinking of this double top and this being a complete reversal out of the euro dollar, at least for a while here, my initial max target was actually the previous level of support. So with all of those being considered, what I had, if I pull my Fibonacci retracement from my max target up to this area, was an area that looks something like this that I can place trades in. So if I drop down to a smaller time frame, that 5-minute chart, you'll see that in that area is where I got my initial trade. So right in that zone, just as we've talked about before, we ended up with an initial trade as a double top. So here's that double top. We have a push up, one top, push down, push back up, double top. And that's the entry we ended up getting. And I think it was this candle right in here somewhere that we ended up getting the entry on. But irregardless, it ended up being a winning trade, a winning day trade here on the euro dollar. Okay, so we have come to the end of an extremely long 25-minute or more video, and I want to say thank you if you stuck around for the whole thing. Make sure you're subscribed. Check out some of our training programs if you thought this was interesting. We give you an entire concept, not only the concept of a strategy, but also go through and teach you how to create a trading plan, a full trading plan, which is exactly what you need in order to profit in the Forex market. I will teach you my personal trading plan in the EAP training program listed below, and also send you 3 to 5 of my personal favorite trades for the week each and every week. Interested in that? Link is in the description. Otherwise, subscribe, click that like button, follow us on the socials, and I will see you guys next time. Have a great rest of your week.